Yes, people, a very, very happy morning to all of you. Properly with smile, you say all of you. Much better. Thank you so much. So, guys, we started with a brand new topic in the last class, which was framework for preparation and presentation of the financial statement. I'll do a very, very quick recap of what we did in the last class. What is this, people? This is international framework. This is international framework which is being agreed by different accounting bodies across the world. We call this as GAP. We call this as GAP, right? Now, what we have done, this GAP is a universal framework, which they asked us to either adopt or converge. What we did is, from this GAP, whatever is suiting our business environment, legal environment, and economic environment, we adopted, let's say, 90% of it, and 10% we left or modified. Hence, we came out with something called as framework. What did we come up with? Framework. This red color portion is there, no? This is called as framework. This framework is something which is suiting our economic conditions, business conditions, and legal conditions. This part, what we have not taken, no? This is that part which is not suitable to our legal conditions, economic conditions, and business conditions. So that we have left over. Whatever is suitable for us, that we have adopted. Got it, not got it. So this is a general framework, a broader framework which has got more options. Now, this framework was taken as a base by Accounting Standard Board. And they felt that if law flexibility kudta, then the financial statement that they prepare may not be consistent, may not be comparable, could be a lot of challenges. So they try to limit the scope of framework. Based on this framework, what did they develop? They developed something called as accounting standards. So Accounting Standard Board has developed something called as accounting standard, considering what? Considering the framework. Considering the framework. Framework is prepared considering what? GAP. So can I say, as an ASB, we have considered GAP also? Yes. Got it, not got it. So this is called as GAP. Sorry, this is called as AS. This is called as AS. Now the problem is, I as a business entity, whom should I follow? Accounting standard, framework, or GAP? What should I follow? I will follow accounting standard. Accounting standard is a more specific accounting rules and regulations, where the options are a little bit more limited to ensure that the financial statement that you prepare is understandable, relevant, comparable, transparent, etc., etc. Got it, not got it. So any entity on whom accounting standard is applicable, they have to follow accounting standard only. You will not look up to framework. Because framework based பண்ணி தான் AS prepare பண்ணிருக்கு. அப்போ உனக்கு என்ன relevant? Accounting standard மட்டும் தான் relevant. When will you look into framework? When you don't get any accounting solutions from the accounting standard. When you're not getting any solution from the accounting standard, then you will apply framework. Then you will look into what framework is saying. Got it, not got it. இந்த பகுதியெல்லாம் பார்த்தீங்கன்னா accounting standard is not considered. Accounting standard said that if I consider so much of framework அப்படின்னா, it will be too much, what do you call it? Too many options will be given to the business entity, which is not good. What those options are, I'll discuss in today's session. Got it? So accounting standard is what first you will apply. Where you don't get any solution from accounting standard, then you'll apply framework to get the solution for. Got it, not got it. In this regard, there is one point that I've added here, which I'll discuss not now. I'll discuss at the end of the session. How the framework should be applied, how the framework model should be applied. This is something which newly I've added, which I've not discussed last class. I'll discuss today, but not now. At the end, once I complete the entire chapter, once you understand what is framework, then I'll tell you what is the step-by-step procedure to apply framework in the absence of accounting standard. Got it, not got it? Okay. This framework is first used by whom? Us or ASB? Us or ASB? First, the framework is used by whom? ASB. The framework will assist ASB for developing new accounting standard and reviewing the existing accounting standard. Got it, not got it? And whatever AS is developed by ASB, that is what entity has to follow. That is what entity has to follow. But if I don't get any solution from any AS, I look up to framework. Who am I? I'm the business entity who is not getting solution from accounting standard. Hence, to seek solution from accounting standard, I'm going to framework. So framework is laying down the basic concepts, assumptions, and principle which will help entities for preparing and presenting the financial statement. And this financial statement, for whom are we preparing? For the external users. So directly can entity go to the framework? No. You have to follow accounting standard. Where accounting standard is not giving you clarity, then you look up to framework. Got it, not got it? Clear or not clear? Okay. Purpose of framework, it helps enterprises in preparing their financial standard as per accounting standard. Where accounting standard is not applicable, you will follow framework. It helps ASB for developing the new accounting standard or modifying the existing accounting standard. This will promote uniformity while preparing the financial statement. This will help the auditor to form an opinion on the financial statement. Got it, not got it? If framework illa appadina, there's no framework means there is no rule. No rule means people are doing what they feel like doing. If people do what they feel like doing, as an auditor, how do I form opinion? Who's right, who's wrong? I can't form any opinion. Now, instead of that, what they've done, they've given a rule. This is what you have to do. For example, valuation of inventories should be done at cost or NRE, whichever is lower. Once the rule is given, if anybody is not following the rule, I can point out and say, no, hey, any rules correct follow pannalan solli solla mudiyudha. Adu edanaala solla mudiyudhu. How am I able to form that opinion? Because of the framework, because of the accounting standard. If framework is not there, accounting standard is not there, then whatever the client is doing, I have to accept. So can I state my opinion? No. An opinion will differ from one auditor to another auditor in the absence of framework. So framework helps the auditor to form a correct opinion whether the financial statement is prepared as per the framework or not. If it is prepared as per the framework, super. If it is not prepared, I can give an opinion. Look, boss, your financial statement is not reliable. It is not understandable. It is not transparent. Like that, I can give an opinion. So to the auditor, this framework will help in forming the opinion. Hence, framework is very important. Last but not the least, it helps users in preparing the financial statement. It helps the users of financial statement to understand and interpret the financial statement. Point number 8 talks about helping the entity to prepare it. Okay, wow. Once you prepare it, as an external user, I have to read it. No. Since you have a proper framework in place, I have also studied that framework only. Understanding the financial statement becomes easy. நீ என்ன படிச்சிருக்க அது வச்சு தான் நீ financial statement prepare பண்ணிருக்க. I as a user also have studied the same framework. So to understand your financial statement is easy for me because you and I have studied same framework. So understanding and interpreting the financial statement becomes very easy. Got it, not got it? Okay. Applicability of framework. When do we apply it? It is applied by all the enterprises. Whose responsibility is to apply the framework? Auditor or the enterprise? Enterprise, because enterprise is the person who is responsible to prepare the financial statement. Who are they? Whether you're doing commercial business, non-commercial business, industrial, non-industrial, business, non-business, private, public, if you are doing any business activity or any kind of activities, you are supposed to prepare the financial statement. Prepare and present the financial statement. For whom are you preparing? External users. And generally, this framework is for that financial statement that you prepare at least once in a year. Sir, can I use the same framework for preparing the financial statement every quarter? You can use it. Nobody is going to stop. Nobody is going to stop you. Okay, not okay. Okay. Framework versus special purpose financial statement. The framework is telling very general point. Now, Income Tax Act or Companies Act is saying that no, you present this accounting in this manner. Who will prevail now? Who will win here? Special purpose financial reports என்ன சொல்லியிருக்கோம் எப்படி ப்ரிப்பேர் பண்ண சொல்லியிருக்காங்களோ அதுதான் நீ ஃபாலோ பண்ணு. So what Income Tax Act or Companies Act or any other act says to prepare, that will follow first, not the framework. Either of these two, if there is any contradictory point up, who will prevail? Special purpose financial report ka clauses will prepare. Got it, not got it? Okay, not okay? Okay. Between framework and accounting standard, if you have to choose, whom will you choose first? Accounting standard. Accounting standard. Framework is not accounting standard. People sometimes confuse that framework means accounting standard. Accounting standard means framework. No, both are different. On the basis of framework, accounting standard is prepared and developed. But framework in itself is not accounting standard. Accounting standard in itself is not framework. Got it, not got it? No. If there is any conflict between framework and accounting standard, which will prevail? Accounting standard will prevail over the framework. How many components of financial statement? 4 components of financial statement. One is balance sheet, statement of P&L, cash flow statement, notes to accounts. These are the 4 components of financial statement. Any problem? No problem. Users of financial statement. We are preparing the financial statement for the users. In total, there are how many users? 7 users. Can you name them? Owner, also called as existing investors. Then employee. Then lenders. Creditors. government, public, or potential investors, customers. Okay, not okay. I'm not discussing all of this because it's been already discussed in last class. So can I skip the in-depth discussion? No. Elements of the financial statement. What are the elements of financial statement? How many elements are there? 5 elements. What? Why 1 seconds? Components na 4. Elements na 5. Components of financial statement 4. Elements means 5. What are components? Balance sheet, statement of P&L, cash flow statement, notes to accounts. Correct? There's one more component of financial statement which is not covered in inter. What is that? Statement of changes in equity. That is requirement as per Ind AS. So in final, if they ask you how many components, they will say 5 component for final. But for inter law, you have 4. Now inter accounts 4. Inter law, how much it is there? 5. Got it? Not got it? Clear or not clear? Okay. Elements of financial statement apnina 5 things: asset, liability, equity. These 3 are the elements of the balance sheet. And then income and expenses. These 2 are the elements of the statement of P&L. Got it? Not got it? Now, do you want to discuss what asset liability are in depth, or depth means for revision point of view, should I do it? Or anyways, evening I'll do revision session. That time can I discuss this? Now only 4 elements I've discussed. Internally I've not discussed. But do you need to remember this? Yes. All of you know that in your examination, they ask direct theory questions also. Yes. You have direct theory questions also. So they might ask you for 2 mark what is asset as per the framework. You have to write down the keywords as it is. There is no change. Resource controlled by enterprise, deriving from which the future economic benefit is derived. No. In the point when the as it is, you have to write it, no change. Got it? Not got it? So out of these 5 elements, any 1 or 2 element they can ask for 2 to 4 marks. You have to write it as it is. Up till foundation, the meaning of all this 5 we studied from layman point of view. It's only now in the CA intermediate we're actually studying the real meaning of these 5 elements from the perspective of the accounts. Proper meaning. Until foundation we studied only general meaning which any layman can understand. But here you cannot write that language income. What is asset? Anything that I own or anything that I expect to receive in future in asset example. You will not get that mark. Till foundation what we studied was a general learning. This is more specific learning. Idudhan exam la eludittu varano. Got it? Not got it? Okay. Seventh point are called as what are the measurements of element of the financial statement. How the elements of the financial statement can be measured. In the point I'm taking at the end. Now I'm going to 8th point. Sir, this point also we have studied in 11th standard, sir. Followed by that in foundation, sir. Why are we taking here? Now here, it's not only the theory point that we are going to discuss. In 11th and foundation, we only restricted ourselves to the theoretical discussion. But here we have practical discussion. Got it? Not got it? And in examination, the question has come from this particular segment, which I'll prove it in some time. The next point that we're going to discuss is what are the fundamental accounting assumptions? There are 3 assumptions in accounting. What is that? Going concern, accrual, consistency. Where did we study this, people? 11th CBC TS level booklet padichirukom. Yes. Not first chapter. Third chapter. Third chapter of TS level. This is foundation. Yes or no? Yes or no? This fundamental accounting assumption who gave? Accounting standard. It is given by framework. It is given by framework. Framework yaar kudta? Gap. Who gave it to framework? Gap. So this is a concept coming from Gap. And whatever Gap said, framework felt it is appropriate. So they are telling internationally, all the accounting bodies are telling that whenever you prepare accounts or whenever any enterprises prepare the accounts, we believe that these 3 accounting assumptions are being followed. In the 3 assumptions நீ follow பண்ணி தான் உன financial statement வந்து prepare பண்ணிருக்கேங்கற நம்புறோம். What is the first assumption? Going concern assumption. What is meaning of going concern? What is meaning of going concern? Yes, going concern means we believe that the business will run for a foreseeable future. Foreseeable means what? Till where I see till where I think, till where I believe the business will run till that stage. I may want this academy to run for next 20 years. Apona, my going concern is how many years? 20 years. After 20 years, I don't know will I be able to take class with this energy or not. So from here, I can at least see 20 years taking classes. Got it, not got it. அதே மாதிரி வந்து ஒவ்வொரு பிஸ்னஸ் பார்த்தீங்கன்னா அவங்களுக்கு ஒரு டார்கெட் இருக்கும். ஐ வாண்ட் ரன் திஸ் பிஸ்னஸ் ஃபார் 50 இயர்ஸ் 100 இயர்ஸ். இப்போ அனுப்புனா பார்த்தீங்கன்னா இட் இஸ் ஆல்மோஸ்ட் 100+ இயர்ஸ். எஸ் ஆர் நோ? ஹவு மெனி இயர்ஸ்? 60-70 இயர்ஸ் ஓவர்? மோர் தென் தட்? ஐம் நாட் ஷோர். Very old entity running for several years, 7-8 decades they are running. Probably more than that. I don't know also. Which means what? When they started business, they started the business with the intention that I want to run the business for a longer period, for a foreseeable future. Till where I can see, till where I can believe, till where I can go, till there I'll do my business. That is the intention with which you started business, no? அப்போ அக்கவுண்டிங் பண்ணும்போது வந்து எப்படி அக்கவுண்டிங் பண்ணணும்? நாளைக்கே பிசினஸ் க்ளோஸ் ஆயிடுன்னு சொல்லி அக்கவுண்டிங் பண்ணுவியா? While doing accounting, will you do accounting thinking that tomorrow itself I'll close the business? Next year itself I'll close the business? And the doubt would accounting panna mudiyuma? No. So why are you saying like this? Now understand this history. All of you know that earlier, long back, when the accounting rules were not in place, I'm talking about 1920s, 30s, 40s. If I was purchasing machinery apnina, they never took this as asset and they never depreciated. And the concept of depreciation all came very off late. In late 90s only it has come. 80s, 90s, 70s, and the period da vandirukku. Before that, people used to take everything to the expenditure. When they said why to take expenditure, you're using this asset for 10 years, no? 10 வருஷம் நீ asset யூஸ் பண்ற, 10 வருஷம் benefit வருது அப்படின்னா, then you also record that asset as depreciation for 10 years. But business argued that, no. What is a guarantee that the business will run for 10 years? If the business closes next year itself அப்படின்னா, then I can't claim expenditure, no? So as a client, why am I claiming expenditure? Why do I want to claim expenditure? Because expenditure will reduce your profit, which in turn reduces your tax. So tax save பண்றதுக்கு வந்து I want to charge a lot of expenditure. So when the government asked, you want to do this business for how long அப்படின்னா, generally when they asked, they said, sir, we want to do as long as possible, sir. அப்போ நீ ஒரு வியூ சொல்லணும். But the moment I say charge depreciation means what are you saying? What if my business closes next year? அப்போ assumption இங்க மாறுது. அப்போ சவரியத்துக்கு நீ assumption மாத்த முடியுமா? முடியாது. If your intention is to do business for 20 years அப்படின்னா, then take the accounting also for 20 years. In that, if asset is going to work for 10 years அப்படின்னா, do depreciation for 10 years. You can't change assumption the way you feel like doing. So if you have a intention to run this business for a longer period, for a foreseeable period, you are a going concern entity. You are a going concern entity. For a going concern entity, accounting will be done accordingly. Got it, not got it? In the going concern இருக்கனால தான் matching concept வந்திருக்கு. If going concern assumption is not there, matching concept will not come. Because if going concern assumption is not there, which means your entity is non-going concern. What is meaning of non-going concern? I may close the business next year. If I may close the business next year, can I record the depreciation for 10 years? No. You'll tell, no, sir, business will close next year itself. No, sir. Then entire expenditure, one shot you'll record. Appa depreciation varadu, AS10 varadu. Got it, not got it? So because of this assumption only, the concept of matching concept is come. Matching concept irukanaல accounting standards irukku. Got it, not got it? Clear or not clear? No. Every entity, while doing accounting, you have to do from that point of view that I'm a going concern entity. I'm a going concern entity. With that assumption only, you have to do business. With that assumption only, you're supposed to do accounting also. Got it, not got it? Okay. Meaning another. Going concern means that the enterprise is expected to continue its operation for a foreseeable future and has neither the intention nor the necessity for liquidation. Liquidation means what? Closing the business. I don't have any intention or necessity to close the business or curtail the operation or to reduce the operation. எனக்கு பிசினஸ் நல்லா போயிட்டு இருக்கு. இந்த பிசினஸ் மூடுறதுக்கும் இல்ல அதோட ஆபரேஷன் வந்து குறைக்கிறதுக்கும் எனக்கு வந்து எந்த அவசியமும் கிடையாது. அந்த ஒரு நம்பிக்கையில என்ன பண்ணணும்? அக்கவுண்டிங் பண்ணணும். ஓகே, நாட் ஓகே? ஓகே சார், ஐ எம் a going concern entity, சார். ஐ எம் டூயிங் அக்கவுண்டிங் ஃப்ரம் தட் பாயிண்ட் ஆஃப் வியூ. இது எங்கேயாவது வந்து நோட்ஸ் டு அக்கவுண்ட்ஸ்ல, இன் நோட்ஸ் டு அக்கவுண்ட் should I disclose this anywhere? Should I give any disclosure to the people, to the user that I am a going concern? Should I give the disclosure? Not required. Why? Because whether you as an entity, I as a user who's prepared accounts, who has learned accounts, We've learned framework also. Framework says what? Do accounting from going concern perspective. So you also know that, I also know that going concern is an assumption based on which the financial statement is prepared. Specifically, do I need to mention people and let them know I have followed going concern? We believe that you have followed going concern. Number on going concern வச்சு தான் நீ வந்து financial statement வந்து போட்டுருக்க அப்படிங்கிறது நம்புறோம். So in that case, do you need to give disclosure? Not required. For example, ma'am has given you schedule when class is going to happen. Today's schedule, morning one class, evening one class. Yes or no? Okay. Today morning, I gave a reminder to all of you. Okay. Is it a necessity for me to give a reminder? Schedule வந்துருச்சு. அப்பனா class வந்து இருக்க போகுது. Should I give a reminder telling that class is there? Schedule is what? Assumption policy, which is being come to you. அப்ப நீ class இருக்குங்கிறது நம்பறியா நம்பலையா? Morning class இருக்குங்கிறது நம்பறியா நம்பலையா? இருக்கு. அப்ப should I give a disclosure that in the WhatsApp group that today morning class is going to happen? Should I give a note or disclosure reminder? Not required. It's assumed that if schedule வந்து போட்டிருக்காங்க அப்படின்னா சார் வருவாங்கன்னு சொல்லிட்டு it's an belief, it's an assumption. When should I give a disclosure? When should I give a disclosure? If I don't come and take the class, I have to give a disclosure in the WhatsApp group telling that today I don't have the intention to take class. Hence I will not take class. Please don't come. அப்பதான் கொடுக்கணும். புரியுதா? In the same concept applies here. When you're preparing financial statement, universally everybody agreed that you have to follow going concern. So you as an enterprise and I as a user, we believe that the financial statement is prepared as per going concern. So should the enterprise give anything in writing that I followed going concern? Not required. Anna, if you prepare the financial statement on non-going concern basis, should you give disclosure? Yes, you have to give disclosure. Got it, not got it? Who's saying all this? Framework is saying. Who's saying all this? Framework is saying all this. Disclosure. When disclosure is not required. If the financial statement are prepared on going concern basis, no specific disclosure is required. No disclosure is required in the notes to accounts. Why? Since going concern is a fundamental accounting assumption, it is generally accepted and implied that the entity is a going concern, and hence the financial statement are prepared on that basis. Hence, we don't give the disclosure that I'm a going concern entity or I followed going concern while preparing the financial statement. Like that, no need to give disclosure. But when to give disclosure? When disclosure is required? If the financial statement are prepared on non-going concern basis, this fact must be disclosed in the notes to accounts. Fact must be disclosed. Fact na teliva mention pannu. You have to give a very clear statement telling that current year we are not preparing the financial statement on the going concern basis. Like that, you have to give an explicit statement. Got it, not got it? Just giving the statement is not sufficient. There are two disclosure requirements here. One, you have to state the fact. Second, all the assets and liabilities will be measured will be revalued, restated at their net realizable value. Oh my God. All the assets and liabilities should be restated at the net realizable value. Got it, not got it? If I'm going concern, all the assets and liabilities are stated at what value? Historical cost. But what are they telling? If you're not going concern appadina, you have to restate everything at the net realizable value. Okay, not okay? Not okay. What did you understand by this statement? Nothing. So tell now, sir, give one practical question for this. Then we'll believe what you say. Hence, I'm taking to ICA module. One question based on this. Lovely question. Majja will come. Superb it is. Take page number, illustration 1, page number 2.7. Super question. This question has come to your exam already. This type of question is asked in your exams. Ma'am, online people, can we see? If you are preparing the financial statement as per going concern aptina, you will follow the respective accounting standard. Most of the accounting standard, they have done all the valuation at the historical cost. Okay, wow. In other words, if I'm an enterprise preparing the financial statement, I will prepare as per applicable accounting standard. Valuation of inventory AS2 should be done at the historical cost or net realizable value, whichever is less. Got it, not got it? Okay. Fixed assets should be recorded at Historical cost. So what the respective accounting standard says that you will follow? What accounting standard says that you will follow? Now, we are going to prepare the financial statement on non-going concern basis. In that also, whatever the respective accounting standard says, you follow. So if any standard talks about how the financial statement has to be presented for non-going concern basis, apnina, follow that. If any AS is not talking about that, apnina, come to me. Who am I? Framework. The framework is teaching us how to prepare the financial statement as per non-going concern basis. Got it? Not got it? Clear or not clear? Okay. One by one, I'll discuss. The same question we'll do from two point of view. Going concern, now what answer? Non-going concern, what answer? This I'm not doing on my own, my dear. This is there in your illustration. Prepare the financial statement assuming going concern, assuming not going concern. Okay, but I'm not doing anything on my own. Ready? Okay. First, let me read the entire question. One by one, we'll come and discuss. Okay, wow. Chal. This is a balance sheet of a trader on 31st March 2021. For my convenience, I'm reading this as 2021. Liability side, I have capital. Profit and loss account 25,000. Profit and loss account 25,000 means what? What is it? I want from data entry students. Who are the data entry students? Raise your hands properly. 1, 2, 3, 4, 5. Okay. Tell me, people, what is the P&L account doing here? P&L account generally வந்து balance sheet வராது தானே? இங்க ஏன் வருதுங்க? What is it? What is this? Huh? Very good. Accumulated profit or undistributed profit. You tell me one thing. In intermediate, can I come and teach all this point here? Why this is accumulated profit? Why this is undistributed profit? Because inter, I have a lot of things to discuss otherwise. If I teach all this up till now, there'll be no time to complete the syllabus. Hence, I make all the data entry students to undergo the basic classes, which will strengthen your base very strongly, so that when you come at this kind of discussion, no, it is very easy for you to cope up. Got it? Not got it? Chalo. So this is undistributed profit. 10% loan is given, 35,000. Okay. Trade payable 10,000. So total liability 130. Assets side, what do we have? Property, plant, equipment, stock, trade receivables, deferred expenditure. That is nothing but deferred revenue expenditure. About deferred revenue expenditure, where did we discuss? 1 in 11th, when I did financial statement. 2nd in 12th, when I did partnership. 3rd, when I did in foundation. So what is deferred revenue expenditure? This is also revenue expenditure only, but we cannot record everything in 1 year. Who's stopping us? Matching concept. Matching concept says that this is a huge revenue expenditure where you'll get benefit for more than 1 financial year. Hence, you have to defer it for multiple years. What example I used to give? Virat Kohli. I paid Virat Kohli 5 crore for doing one advertisement, for doing one ad. Ipo enak reel irukla. You see my ad reels and all. Virat Kohli is not there. No, people are saying, which ad reel Virat Kohli? I'm telling, I have an ad reel without Virat Kohli. Imagine in that ad, if Virat Kohli is there up till for that ad, how much he's asking? 5 crore. My question is, that reel what is being prepared, can we call this as asset? Asset na capital expenditure. Can I take this as asset? No. And this 5 crores what I pay to Virat Kohli, I'm going to use this video for multiple years. How many years also I don't know. How many years I don't know. But I have to predict that this reel is going to generate benefit for how many years. So I'm saying that this reel will help me to generate benefit for 5 years. So matching concept says that this 5 crore, a portion over a period of 5 years. Now expenditure of 3 types: revenue, expenditure, capital expenditure, and deferred revenue expenditure. Can I take to revenue expenditure? No, because when will you take to revenue expenditure? When the benefit from that is consumed in the same financial year up to revenue expenditure. But in this case, I'm getting the benefit for more than 1 financial year. So it cannot be revenue expenditure. Second option is capital expenditure. Capital expenditure up to I should have a resale value. You take any asset, I'll be able to sell that in market and get something out of it. Either tangible or intangible. I can get some future economic benefit. Got it, not got it. Here, is the future economic benefit guaranteed? No. அப்போ இந்த ரெண்டு எக்ஸ்பெண்டிச்சர் என்னால கிளாஸிஃபை பண்ண முடியல. So they came out with a new concept called as deferred revenue expenditure. This is also revenue expenditure only. But based on the matching concept, we are deferring it for more than 1 year. Got it, not got it. Got it, not got it. So total deferred revenue expenditure, which is still not charged off, is 10,000. Got it, not got it. Maybe the total deferred revenue expenditure was maybe, for example, 15,000. In there, how much have you deferred so far? 5,000. How much is balance? 10,000 I'll write off in upcoming years. How many years we don't know. The question will tell. புரிஞ்சுதா? I'm just doing a recap of what we studied in the foundation level. Bank balance 5,000. So far clear? No problem. Additional information says that the remaining life of the property, plant, equipment is 5 years. So this property, plant, equipment I have to depreciate in how many years? 5 years. Got it? Not got it? Okay. The pattern of use of the asset is even. I'm using the asset on even basis. Means what is it trying to say? Which method? Straight line method. In straight line method, we believe that all the assets are used evenly throughout the year. Got it? Not got it? Sir, if the asset is not evenly used throughout the year, then what are we supposed to use? Either WDV or machine hour rate method or production rate method or depletion method or sum of years digit method. Okay, not okay. Inga concept was to discuss non-going concern. So they didn't complicate your life in depreciation topic. They kept the depreciation concept very simple here. They kept the depreciation concept very simple here. The net realizable value of the property, plant, equipment on the date 31st March 22. 31st March 22 is the Varsha kadisile. This is 31st March 21. Year beginning. Year beginning ka asset value is given. At the end of the year, the value of the asset is how much? 60,000. What is the meaning of this? In the version if you use பண்ணதுக்கு அப்புறம் if you go and sell this asset in the market, you will get 60,000 rupees. Got it? Not got it? Okay, not okay? Okay. The traders purchases and sale during the current year 2021-22 for this entire financial year, this much is the purchase value, this much is the sale value. Any problem? Purchase and sale will go where? Trading and P&L account. Trading and P&L account. Okay, okay. The cost and the net realizable value of the stock. Cost of inventory. NRV of inventory is given. Cost of inventory 32,000. NRV is 40,000. Got it? Not got it? What are we supposed to apply here? If I'm a going concern apdina, I'll apply accounting standard 2. Accounting standard 2 says, where did we learn this? In foundation. Accounting standard 2 says that inventory should be valued at cost or NRV, whichever is lower. Got it? Not got it? Okay. Expenses amounted to 1,400. All the business expenses put together is how much? 1,400. Includes interest of 10% loan of 3,500 of the year. So whatever is the loan, no? How much loan taken? 35,000. 35,000 ka 10% is how much? 3,500. That 3,500 is included in this expenses. Got it? Not got it? Can I let it be included in that itself? No. Better what we do, no? From this 1,400, we take 3,500 as finance cost. And remaining as other expenses. As business expenses. Got it? Okay. Deferred revenue expenditure is amortized equally for 4 years. How many years should we amortize? 4 years we have to amortize because we are expecting the benefit to come for 4 years. Trade receivable on 31st March 2022 is 25,000. This is 20,000 in the beginning of the financial year. Anga kuduthathu end of the financial year. Correct? No. So as on the balance sheet date, 25,000 is receivable, debtor value. Of which 2,000 is doubtful. 2,000 is doubtful. If 2,000 is doubtful, what are we supposed to create? Provision for doubtful debt. Provision for doubtful debt. Got it? Not got it? Got it. Collection of another 4,000 depends on successful reinstallation of certain product supplied to the customer. This point you will not understand. I have to discuss. I am keeping it pending. Closing trade payable is 12,000. Closing trade payable. Trade payable enna? Creditor is 12,000. Which is likely to be settled at 5% discount. Likely to be settled at 5% discount means what? When I'm going to pay the money, I'll not pay full 12,000. I'll pay 5% less. The 5% which I'm not paying is my gain, which is my gain. If it is going concern, treatment is different. If it is non-going concern, treatment is different, which I'll discuss now. Cash balance is 37,100. Cash balance is 37,100. No problem. You'll be wondering, sir, cash balance is already given here. No, sir. At a donkey fellow, this is balance sheet of the beginning of the financial year. They are asking us to prepare the balance sheet at the end of the financial year. So for that, I need some data of asset liability. No. So that data is given where? In the additional information. Got it? Not got it? Got it, sir. There is an early repayment penalty for the loan of 2,500. There is an early repayment penalty for the loan of 2,500. What is this? What is this? Ju is telling that if I pay late apdina penalty vana puride. I'm giving early donkey fellow, you're charging penalty for that also. Somebody is saying something. Early. இயர்லி இல்ல early. கரெக்ட். அதான் வந்து டிரான்ஸ்லேட் பண்ணிட்டீங்க. பட் ஏன்? Very good, very good. Super point. Brilliant point. Now, what he said, no, I'll elaborate. But very good point. Super point. Now, those who didn't understand, don't worry. When I do this question, that time I'll explain you why bankers charge penalty for pre-closure of loan. When you close the loan earlier, no, why they charge penalty, I'll discuss when I come to the topic. Okay, va? Oral question, oral question is understood? Okay. What are they asking? You are required to prepare profit and loss account and balance sheet of this trader, assuming that they're going concern. If going concern, na, what will be the financial statement ka data? If it is non-going concern, what will be the financial ka data? Got it, not got it? Can we do simultaneously? Okay. So take a fresh page. Write heading profit and loss account for the year ended 31st March 2022. Sir, will we not do trading and P&L account? Not required. Listen to me very carefully. Trading and P&L account that we prepared was for our convenience. Nowhere in the accounting standard or framework it is said that you compulsory have to prepare the trading account. Purida. But 11th and 12th foundation what we did is based on accounting convention. What is accounting convention? Based on the earlier practices of all the previous, accountants, chart accountants, they followed this method. We didn't feel anything wrong in that, so we also adopted as it is. So adula or practice trading P&L போட்டு பழகிருக்கும். Should we prepare trading in P&L? Always not required. Directly you can prepare P&L also. Directly you can prepare the P&L also. So here they have not prepared trading account. Directly it is profit and loss account, which means trading and P&L is combined together into one single ledger. Any difficulty? No difficulty. Can I any difficulty? No difficulty? Okay. Like in capital account, for two partners, we have two columns, no? Here also we'll put two columns. One for going concern, one for non-going concern. Okay, va. In exam, if the same question comes, do it same way because you'll save time. If you do it two times separately, no, it'll be time consuming. One whole page for profit and loss, second page for balance sheet. GC is going concern, non-GC is non-going concern. GC and NGC. Next page, balance sheet also. Right, writing full form, I'm writing in shortcut, you're right fully, properly. I have a question to all of you. Whether I'm preparing the financial statement as per going concern or non-going concern, will the accounting treatment change for purchase and sale? Will the accounting treatment change for purchase and sale? No. Whatever I've purchased, I have to record in purchase account, and whatever is recorded in purchase account, it will come to my trading P&L account. So whether you are preparing the financial statement for going concern or non-going concern, your purchase value, sale value, in short, your nominal accounts will have no significant effects, no significant effect. Lightly here and the changes will come, where I'll discuss. But mostly it will remain same. Got it, not got it? Okay. So here we saw somewhere purchase. Tell me, before purchase, what do we record? Opening stock will record. Is opening stock given in the question? Is opening stock given in the question? Where it's not given? It's not given. Opening stock is only kuduthirukka. donkey fellow, we are preparing financial statement at the end of the year, which is 31st March 22. What is the beginning date? 31st March 2021. Balance sheet of 21 is given. So closing stock of 21 is nothing but opening stock of 21-22. Closing stock of the previous financial year is the opening stock of current financial year. So this is my opening stock. Opening stock. Got it? Not got it? Opening stock. We transfer it to the trading and P&L account. Got it? Here it is P&L account. We transfer to trading and P&L account. Yes or no? Because we believe that this full stock has been sold. This full stock has been sold. So if the full stock has been sold, we will record this as expenditure. So what is my transfer entry? P&L account debit to opening stock. Opening stock is asset. To close it, I'll give a credit. So to opening stock. Debit what? P&L. P&L account debit to opening stock. So to opening stock will come 30,000. To opening stock will come 30,000. For non-going concern, will it be anything different? No. Expenditure for whether it is going concern or non-going concern, my expense is going to be same, no boss. So 30,000 is my opening stock expenses for both going concern and non-going concern. Is there a doubt? Any doubts in this, please? No. Okay. Next, I'm searching for purchase. Where is purchase? Sir, point number B, sir. In point number B, the total purchase is 4 lakh and sale is 4.5 lakh. Purchase value and sale value will not get affected whether the financial statement is prepared as per going concern or non-going concern. Purchase 4 lakh, sale 4.5. Two purchases. 4 lakh. 4 lakh. Buy sales. 4 lakh 50,000. 4 lakh 50,000. Any problem? Any problem? No problem. What we learned in 11th and CA foundation, in same way I'm preparing the financial statement. 11th le padchola, financial statement for the sole proprietorship concern. Same way we are preparing. Preparing the financial statement as per going concern is there, no, for this trader. The same thing is what we've learned in 11th and foundation. Preparation of the financial statement for the sole proprietorship concern, partnership concern, and companies what we prepared, no. On what assumption did we prepare all that? On the basis of going concern assumption. Going concern assumption. So going concern assumption is what you've been practicing for last 3 years. Got it? Not got it? Non-going concern the pudu sinik padigirom. Okay va? Okay. Now, expenses are 14,900. Expenses 14,900. Any problem here? In that 3,500 is my interest on loan. Interest on loan. Any difficulty? No. So can I do break up and show it? I'll break up this and show. Okay. Let me see what have they done here. They've charged entire amount in one shot. Can I follow the same routine? Here they have done it. In some of the MTPRT PEP question, they have segregated. Both is okay. But for now, to match the answer exactly with ICI, I'm not segregating it. I'm putting it together itself. Is that okay? Okay. But in some places, if you find the breakup, you will not get scared, no? Because that breakup also is allowed. Two expenses. How much is it? 14,900. 14,900. 14,900. So far, whatever we have recorded, either expense or income, did it change because of being non-going concern? No. So far, whether it is going concern or non-going concern, the treatment is same. Treatment is same. Okay, not okay? Okay. Can you search and tell me any other P&L item? First point talks about property, plant, equipment, life. I will use this for what purpose? Depreciation. Now listen to me very carefully. Listen to me very carefully. The property, plant, equipment, the value at the beginning of the financial year is 65,000, which is 31st March 2021. If I'm going concern means what? I'll run this business for a foreseeable future. How many years? I don't know. But I'll run this business for many years. Out of that, this particular PPE, property, plant, equipment, I can further run for 5 years. I can use that for 5 years. See, business may run for 10 years, 15 years, 20 years, 100 years. But machine also should run up to that stage. There's no guarantee, no? So this 5 years is what? Remaining life of the PPE. Got it, not got it? Got it, not got it? Now, what is the depreciation for this year? If I believe this asset will be used further next year, 65,000 into 1 by 5 into 1 by 5. Got it, not got it? 65,000 rupees I will use it for 5 years. Then for 1 year, how much? Cross multiply. 65,000 into 1 by 5. So what is the depreciation usage value of the asset for the current year? 13,000. 13,000 worth of the asset I'm using in the current year. In the PP current year I'm using for 13,000 rupees. So what is the remaining value of the asset at the end of the year, 31st March 22? 65,000 minus 13,000. How much is the balance? 52,000. If I'm preparing the financial statement as per going concern assumption, I'll take this 13,000 to depreciation. I'll take this 13,000 to depreciation, and PPE will be reflected in the balance sheet at 52,000 rupees. This is what we studied in 11th, 12th and foundation. Yes or no? Yes. So can I record 2 depreciation here? 2 depreciation. How much? 13,000. If I go to balance sheet, property, plant, equipment, PPE, in bracket, 65,000 is the total value of the asset. If I do 13,000 minus, what is the balance? 52,000. 52,000 is the balance. Any problem here? Any problem here? What we did so far is what we studied in 11th, 12th and foundation. Now, the same transaction, how it will be recorded if I'm a non-going concern? Okay, wow. What is meant by non-going concern? There is no guarantee that the business will survive next year. High chances that I'll close the business next year. Next year, when I don't know. Next year, whether I'll close in the month of April, May, June, July, August, September, October, November, December, Jan, Feb, March, April, May, June. When I'll close, I don't know. Business enna ipdi close panni mudiyuma. You have to sell all the assets. You studied dissolution, no? In dissolution, to sell all the assets, we take time. Chumma, you can't sell it. It takes time to sell the asset. You have to find the correct buyer. He will, quote one offer price, which we will not accept. We will charge higher price. Negotiations will go on. Nothing will be able to be sold that easily. It will take time. Liquidating a business will take time. Until you liquidate, you have to prepare the financial statement. 31st March, you got to know that you're going to close the business. Got it, not got it. Which means what? From going concern, you've become non-going concern. From going concern, you've become non-going concern. Now, recording the asset at 52,000 doesn't make sense. Recording the asset at 52,000 doesn't make sense. Here, non-going concern says that you have to revalue all the assets and liabilities at the net realizable value. Means what? If I sell the asset today, what value it will fetch me? At that value, you have to bring all the assets and liabilities. Got it, not got it. Now, this 52,000 what you've recorded is recorded based on the historical data. You've purchased the asset and you estimated that the useful life is so and so. If 65,000, imagine, is the cost of the asset. 65,000 is cost of the asset. You are thinking that I'll use it evenly for 5 years. So depreciation for every year is 13,000. What is the meaning of this 13,000? This 13,000 means that to the extent of 13,000 rupees, you have used the asset in the current year. 13,000 ரூபாய்க்கு வந்து நீ asset யூஸ் பண்ணிருக்கேன்னு சொல்லி சொல்ற. நீ எழுதி கொடுக்க முடியுமா? இதுக்கு தான் நீ இந்த காசுக்கு தான் நீ asset யூஸ் பண்ணங்கிறது ப்ரூவ் பண்ண முடியுமா? Can anybody on this planet prove that exactly for 13,000 rupees only you have used the asset? Can you prove it? No. Apona, on what basis did you calculate this 13,000? On estimation basis. You estimated the life of the asset is going to be 5. In reality, it can be 4 years also, no? It could be 6 also, or no? Apona, this entire calculation on estimation basis. So accounting level, the estimation is allowed when on going concern basis. You're telling that my asset value is 52,000. But on 31st March 22 today, I went and asked a person, if you buy this machine, for what value you will buy up in Kekumode? He's telling I'll buy it at 65,000. Sorry, 60,000. The net realizable value of the PPE is now 60,000. So non-going concern says that all the asset and liability should be restated at net realizable value. Not the value at which you've been showing so far. So far, you've been showing at historical cost using multiple estimates. How much at 52? Now you cannot do that. Now you cannot do that. You have to show at net realizable value. Got it, not got it. Now, what is the value of the asset in the beginning of the year? 65. At the end of the year, if I go and sell this asset, how much money will I get in my pocket? 60 varo. How much money you will not receive? 5,000. That money which you don't receive is your loss. The losses will be recorded in the P&L account. Got it, not got it. So how much is your depreciation now? 5,000 is depreciation. Understood how to calculate depreciation here? Now, to calculate this 5,000 depreciation, did I follow accounting standard 10 here? Did I follow accounting standard? No. So when you prepare financial statement as per non-going concern basis, you will not follow respective accounting standard. In any accounting standard, for a non-going concern basis, how to do accounting அப்படின்னு சொன்னா அது follow பண்ணுவீங்க. சொல்ல அப்படின்னா we will follow what framework says. So what is framework saying here? You have to record all the PP at net realizable value. At net realizable value. Got it, not got it? Okay. Appo, in the balance sheet, if I have to have the asset 60 அப்படின்னா, how much should I depreciate now? 5,000 rupees. Look at this. Depreciation, how much have they recorded? 5,000. So to depreciation, 5,000 will come here. I'll put in red so that you understand that where the exact difference came. Enga difference vandingiradhu you have to know, no? I'm putting this in red. How did you get this 5,000? 65,000 minus 60,000. What is 65,000 called as? Donkey fellow, 65,000 is not net realizable value. 65,000 is called as book value. Book value is also called as CV, carrying value. What is it called as? Carrying value. Also called as WDV, written down value. These are the three different names they'll try to confuse you with. Purida, got it, not got it. What is the 60,000? NRV, net realizable value. Because it is agreed that when the financial statement is prepared as per the non-going concern basis, all the assets should be revalued at NRV. So I'm bringing down the value of the asset to NRV. Got it, not got it? Got it. Similarly, when I come to PPE, 65,000 worth is the cost of the asset. In that, 5,000 depreciation gone means what is NRV? 60,000 is NRV. Got it, not got it? Any difficulty? Which means what? From now onwards, if I sell this asset apnina, I'll be able to fetch 60,000. I'll be fetching at 60,000. So this is at NRV. NRV. All the assets and liabilities are at NRV. Got it, not got it? Okay. If this is clear, can I go to next point? Next point, B point is also over. C point, super point. If I'm a going concern apnina, I should follow which rules and regulations? Accounting standard. Inventory ku vandu, stock ku vandu, which standard is governed? Accounting standard 2 is governed for the valuation of the inventory. AS2, for a going concern, what rule it has laid down? This we have studied in foundation. Inventory should be recorded at cost or NRV, whichever is lower. Whichever is lower, that conclusion has come because of what concept? Very good. What principle? Prudence principle, prudence concept. When I took inventory at the foundation level, I told you the prudence concept has been applied. The next chapter that we are going to deal with is AS2 only. So there, let's see if we have to discuss that point or not, but not now. Remember, inventory should be valued at cost or NRV, whichever is lower. How much is cost here? 32 is cost. 40,000 is NRV. In this, which is lower? Cost is lower. Okay. This cost can be computed using how many ways? To calculate the cost of inventory, what are the different methods? FIFO, weighted average, LIFO. LIFO is not practically applicable, so leave that. Generally, there are two methods, FIFO and weighted average. Based on that, we calculated the cost of the asset. NRV enna? Na vikke pona enna varum? What is the price if I sell the inventory today? Lower of that we have to record. Got it, not got it? Okay. What is my value of the inventory as per going concern? 32,000. Value of inventory is 32,000. So go to the profit and loss account. Record closing stock here. Buy closing stock. How much it is? 32,000. In the balance sheet also, right? Closing stock 32,000 under going concern. My question to all of you. This closing stock which is recorded in the credit side of P&L, no? What is the nature of the closing stock? Is it income, expense, gain, loss, asset, liability? What is the nature? Why are we recording this here? It is reversal of expenditure. Means what? Very good. If this 4 lakh or 30,000, this 4 lakh 30,000 includes this 32,000 worth of stock which is not contributed to the sale. So if any expenditure that you're recording on debit side, which is not contributing to the sale, that expenditure cannot be booked here, but you have booked it. To reduce that expenditure on debit side, we're giving a credit. So this 32,000 has got the impact of reducing your expenditure, which is not contributed to the revenue. This concept where did I discuss? This concept, where did I discuss? First in 11th CBSE, second, 12th, third, foundation. Fourth time, where did I discuss? In the CA Inter, when I did Schedule 3. First class of Schedule 3, we spoke about this. Yes or no? So tomorrow, if anybody asks you this question, that why is closing stock coming in the credit side of trading account, can you answer? Yes. Because your client will ask what you know. Mapla, closing stock நீ credit side போட்டா profit ஏறும். What is closing stock? விக்காத பொருள் நீ எதுக்கு closing stock ரெக்கார்ட் பண்ணி profit ஏத்து tax கட்டுறேன்னு மாவன். Is this closing stock increasing your profit? True. It is increasing profit. But why it is increasing profit? Because you recorded extra expenditure. நீ expense அதிகமா ரெக்கார்ட் பண்ணிட்ட, profit கம்மி ஆயிடுது. அந்த profit கரெக்டான லெவல்ல கொண்டு வரதுக்கு தான் நம்ம வந்து closing stock ரெக்கார்ட் பண்ணி increase பண்ற profit. So actually, are we increasing the profit and paying extra tax? No. You recorded extra expenditure, so profit got suppressed. To make it back to normal only, we are recording closing stock. So client will ask like this only. You need to know how to answer. Got it, not got it? Okay. Now, coming to the same closing stock, for preparing the financial statement as per non-going concern basis. When I go with non-going concern basis, will I follow AS2? No, I'll follow framework. What does framework says? Record all the assets and liabilities at the net realizable value. இன்னைக்கு இந்த ஸ்டாக் வித்தா எவ்வளவு வரும்? That is what you have to record. Everything should be bought at the net realizable value. Got it, not got it? AS2 does not talk about the financial statement being prepared on the non-going concern basis. It is only talking about going concern basis. So for non-going concern basis, where should I come and ask framework? We have to get opinion from framework. So framework says what? Everything should be prepared at net realizable value. So here, what is my net realizable value? 40,000. You will now record stock at 40,000 rupees. Got it, not got it? Super. So 40,000 closing stock here. And 40,000 closing stock here. Whatever I've done in red, that is the difference between going concern and non-going concern. Effect is coming in this place. This is clear? Super. Next. Expenses part over. Any doubt in this? Any doubt in this? No problem. Everything is clear? Pakka? Okay. You're telling I'm going. I'm going to next point. Chalo, great. E point. Deferred expenditure is amortized equally over 4 years. I will do the depreciation of deferred revenue expenditure for 4 years when I'm a going concern. In business 10 வருஷம் 20 வருஷம் போகுது அப்படின்னா I'll amortize this deferred revenue expenditure for 4 years. Correct? But if I'm non-going concern basis அப்படின்னா, which means I'm going to close business anytime next year. I may close the business in next 1 month, 2 months, 5 months, 6 months. Will you divide this expenditure for 4 years and keep it in the balance sheet? No. அப்ப என்ன பண்ணணும்? One shot, very good. Who said one shot? One shot you take to the P&L and finish it. Now here matching concept is not coming to picture. Matching concept will come when you're telling that this deferred revenue expenditure will give benefit for 4 years apdina, then you record expenses also for 4 years. Inge you're closing the business next year, boss. Where is the question of matching concept here? Entire expenditure you'll record in the current year. Sir, next year, 20 to 23, 3 months I will run the business. No, sir. 3 month benefit got no, sir. Avlo mind paaka vendam. When you're non-going concern apdina, for running the business for 3 months, 6 months or 1 year, don't look into it. Please understand, when I'm on the verge of closing the business apdina, definitely here and there small amount of business I'll do. That business may happen or may not happen also. So on the business nadukungra asapatte, you cannot record the deferred revenue expenditure for next year also. So non-going concern basis framework says that once you've decided that you're non-going concern basis apdina, these kind of deferred revenue expenditure should be amortized then and their full amount. Deferred revenue expenditure ka another name will be what? Miscellaneous expenses. They'll put. Where enna poduvanga? Preliminary expenses. You can use any language. Advertisement suspense. Fictitious asset அப்படிங்கிறது பல name இருக்கும். How do I know this is a deferred revenue expenditure? If they tell that it will be amortized for 4 years அப்படின்னா அப்போனா this is deferred revenue expenditure. Got it, not got it? This I've been telling from 11th standard. Deferred revenue expenditure, another name is advertisement suspense. Then fictitious asset, miscellaneous expenses. Sir, In one question, they gave miscellaneous expenses. Miscellaneous expenses they gave here. Where will you take this now? In the expenses, the miscellaneous expenses. Will you take it to the balance sheet? No. Arey Baba, this is a normal expenses. This miscellaneous expenses will become deferred revenue expenditure when the word amortized equally for 4 years is there. For whatever expenses, if they talk about amortization apnina, it is deferred revenue expenditure. Got it, not got it? There are two types of revenue expenditure. One is normal revenue expenditure. One is deferred revenue expenditure. Normal and this is normal revenue expenditure. The expenses I'm recording then and there in every year. That is normal revenue expenditure. When does this become deferred revenue expenditure? When the same revenue expenditure, if I defer it for more than 1 year, this becomes deferred revenue expenditure. Got it, not got it? So revenue expenditure is normal or deferred. How will I identify? If they talk about amortization of that. Upon deferred. So name name can be anything. Don't look at the name and decide. Look at the accounting treatment and decide whether this is deferred or non-deferred. Got it, not got it? Super. So if I'm a going concern, what will I do, people? Going concern apnina, this 10,000 is there, no? I will break up into 4 years. 10,000 into 4 into 1 by 4. How much it is? 10,000 into 1 by 4, which is 2,500. About 2,500, I'll take it to P&L. What is the balance deferred in expenditure? 7,500, which will continue for the future business, future financial statement. I'll carry forward and then amortize for the remaining 3 years. Got it, not got it? Got it, not got it? Anna, if I'm preparing this financial statement from the non-going concern perspective, then what is my full amortization? 10,000 rupees is my full amortization. So what is the balance of deferred and expenditure in the balance sheet? 0. Got it, not got it? Super. So now, to amortization of deferred revenue expenditure. 2,500. And here it is 10,000. Here it is 10,000. Got it, not got it? In the balance sheet, deferred revenue expenditure will be 10,000 minus 2,500, which is 7,500, and 0 for the non-going concern basis. 0 for non-going concern basis because everything we have to write off because we are closing the business. Ella seller expense ellame book pannunga. Any problem so far? Any problem so far? Can I go to the next point? F point. Trade receivable means debtor. At the end of the year, 31st March 22, 25,000. Okay. Means from the debtor, I'm supposed to collect 25,000. Out of this, there is one particular debtor from whom I'm doubtful that whether this 2,000 may come or may not come. Any reason it could be. We have discussed the reason in the foundation level. So inter I cannot discuss. But 2,000 is doubtful. Doubtful and I'll discuss again. Inter I'll discuss. Where I'll discuss, Tell me, September people, where do we discuss? Provision for doubtful debt, where do we discuss? In which accounting standard? Very good. In AS 29, sorry. I said in inter I will not discuss. I'm sorry. In inter we'll discuss. In depth actually. Where? In AS 29 I'll discuss. Not right now. Doubtful article. Doubtful article. Based on foundation concept, what do? We create the provision for doubtful debt. On what basis? On what principle? What concept? Based on what concept do you create provision? Based on the prudence concept. Prudence concept is also called as conservatism principle. It says what? Record for all the anticipated losses. Record for all the anticipated losses. 2,000 is doubtful. May come or may not come. Means 50-50 chances. So law says you to create a provision for doubtful debt. Can you please tell me the journal entry for creating provision? P&L account debit to debtor. Sorry. To provision for doubtful debt. To provision for doubtful debt. Yes or no? Yes or no? This 2,000 will create. Whether you're going concern or non-going concern, both provision will create. For going concern, I follow this because accounting standard says. Which standard? Accounting standard 29 says. For non-going concern, I have to record the debtor at what value? Net realizable value. What does it mean? Out of 25,000 rupees, if 2,000 is doubtful to realize up to now, then what is balance realizable? 23,000. So in both the cases, I have to create provision. Any problem? So provision for doubtful debt has to be created whether you are preparing the financial statement on going concern basis or non-going concern basis. Okay, ba. No problem so far. Because next point is masala point. If this is clear, masala point will make you understand properly. So far clear? Online people respond. So far clear? Okay. Look at the next line. Collection of another 4,000. Apart from this 25,000, in the 25,000, apart from this 2,000, there's another customer from whom I have to collect 4,000. In the collection will depend on the successful reinstallation of certain products supplied to the customer, which means we are doing some installation work, some product we are selling, which is requiring installation. Let's suppose this particular client is in the business of buying and selling electronic items. In the trader and in the business is buying and selling electronic item. Will AC come under electronic item? Yes. Will AC come under electronic item? Yes. And the AC installation is not properly done. Customer is suffering. From customer you have to collect 4,000 rupees. So customer says that நீ கரெக்டா திருப்பி ஏசி ரீஇன்ஸ்டால் பண்ணி கொடுத்தீங்கன்னா நான் 4,000 கொடுக்குறேன்றான், இல்லைன்னா கொடுக்க மாட்டேன்றான். Collection of another 4,000 depends on successful reinstallation of certain product supplied to the customer. Now for this 4,000, what should I do if I'm a going concern? Going concern another. I'm going to do the business. If I'm doing the business அப்படின்னா, to get this money, I will give the necessary services. In that, if reinstallation is required அப்படின்னா, I'll go to his house and do the reinstallation because I want that 4,000. Reinstallation charges 500 தான். I have to give it to my staff. To save that 500, will I leave the 4,000? No. And the 500 போனாலும் பரவாயில்ல, 4,000 வரட்டும் அப்படின்னு சொல்லிட்டு you will make efforts. But you will make efforts when you're going to continue the business. புரியுதா? So for going concern basis, should I create any provision for this 4,000? No. Going concern means what? I'm going to continue the business. If I'm continuing the business, will I have the intention to do the services? Yes. So I will do reinstallation. You have to assume that we will do reinstallation. But reinstallation பண்ணினா பணம் வந்துருமா? வந்துரும். So should I create provision for that? Not required. Should I create provision for that? No, not required. So if I'm a going concern அப்படின்னா, no need to create any provision because I believe that I will successfully do the reinstallation. If the question says whether going concern or non-going concern, the trader will not do reinstallation அப்படின்னா, அப்போ this 4,000 is Govinda only. Then you will take it to the P&L as loss. But here nothing they have told. If I'm going concern, trader going concern na, எதுமே சொல்ல அப்படின்னா, we believe that we will do that reinstallation work. Since we are assuming to do reinstallation work, we believe that we'll do the reinstallation and get this money in future. So should I book any loss for it? No. Got it, not got it? Okay. But if I'm non-going concern, அப்படின்னா என்ன? Next few days, in next few weeks, in next few months, I'm going to close my business. அப்போ என் மைண்ட் செட் என்ன இருக்கும்? எல்லாத்தையும் வித்துட்டு டக்கு டக்கு மணி எடுத்துட்டு நெக்ஸ்ட் பிசினஸ் போலான்னு இருக்கும். In that mindset, will you have the intention to go and do reinstallation to the client? When you're with the intention to close everything and go, will you think about the customer service? Will you think about customer satisfaction? நீ போயிடுவே, போடான்னு சொல்லிட்டு போயிட்டே இருப்பேன். அப்போ will you do reinstallation? No. Will the money come? No. So in such case, if you're a non-going concern அப்படின்னா, you will record this entire 4,000 as provision for doubtful debt. So going concern அப்படின்னா, this 2,000 alone is a provision for doubtful debt. But if you're not going concern அப்படின்னா, this 2,000 plus 4,000, 6,000 is your provision for doubtful debt. Got it, not got it? Is the emotion clear or not clear? Manly, no confidence coming from your end. What is the problem? Which point? 4,000. Simple. Imagine, Manly, you are the trader. You are on the verge of closing a business. To collect this 4,000 rupees, will you go and do the reinstallation? Maybe, maybe not. But generally, think from very general perspective. When one person is closing the business அப்படின்னா, first of all, you have the pain at heart. This business I've said for so long. I'm closing the business அப்படின்னா ஒரு emotional close பண்ணுவான். Plus, when you're closing the business, no, you'll have a lot of stress. This asset I have to sell. That asset I have to sell. You're dealing with multiple parties for buying and selling the asset. If that money comes, I have to make the payment to so many liability holders. Daily in tension life you are. புரியுதா? ஒருத்தர் பிசினஸ் க்ளோஸ் பண்றானா டென்ஷனோட தான் பிசினஸ் க்ளோஸ் பண்ணுவான். அந்த டென்ஷன்ல நீ கஸ்டமர் வீட்டில் போயிட்டு ஏசி திருப்பி ரீஇன்ஸ்டால் பண்ணிட்டு 4,000 எடுத்துட்டு வருவியா? இல்ல போயிட்டு போகுதுன்னு சொல்லி விட்டுருவியா? என்ன பண்ணுவ நீ? You with that frustration you leave it and come. Same way here also we believe that when you're closing the business, you will not do the reinstallation. If you don't do reinstallation, money will not come. அப்ப நான் லாஸ் தானே? That loss I'm booking in form of 4,000 rupees provision. புரியுதா? So if you're non-going concern அப்படின்னா, you'll book the losses, 2 losses. One is 2,000, second is 4,000. So non-going concern will record provision, 2 provision, which is 6,000 in total. But if I'm going concern, what is my provision value? Only 2,000. Got it, not got it? Got it, not got it? Oh. Now for going concern, what we're assuming that we will do the reinstallation service in future. Therefore, money will come. There is no doubtfulness. Here, they should have made that clarity. In the question, they should have given the clarity that whether in future are they going to do successful reinstallation or not. But they have not told. We have to assume. When you do assumption, the assumption should be a logical assumption and best case assumption. So what is the logical and best case assumption? If I am a going concern entity abdina, we normally believe in customer satisfaction. You take any businessman, normally, can I say every businessman will focus on customer satisfaction? In this case, customer satisfaction will come when? Only when the reinstallation is done. So we believe that this trader is the one who takes care of the customer satisfaction and he will do the reinstallation. Believe panni, assume panni, tamena mandro, question mandro. So when he is going to do reinstallation work aptina, whether this money will come or not, it will come. When the money is going to come, will you create provision? Provision should be created only when the money is highly doubtful to come. But here, I'm going to do reinstallation services. Money is going to come. On that assumption, you're doing the accounting aptina. For going concern, is this a provision? No, this is not a provision. Got it, not got it. For non-going concern, we assume that we will not do services. Because the business close panna procedure. I mean, so much stress, boss. Here, I will not think about customer satisfaction. When will I think about customer satisfaction? When I'm continuing the business. When I'm closing the business, will I think about customer satisfaction? What answer to pay there? Now, trader. Trader. Got it, not got it. So therefore, in that case, non-going concern basis, you assume that this 4,000 money will not come because you're not going to do any reinstallation. So we are recording the loss today itself based on the prudence concept. Now clear? Now clear? One more time, if you want, I can explain. I have no problem. This is very, very important. Same ditto question is come in the exam. And I'll show it. Today I'll show it. This is there in exam. Okay, can I continue? Chalo. So 2 provision for doubtful debt. 2 provision for doubtful debt in case of going concern is how much? 2,000. Non-going concern? 6,000. How did that 6,000 come? 2,000 plus 4,000. Make a note. Later you'll forget. In the balance sheet, provision has to be subtracted. Yes or no? Yes. So, trade receivable in the inner column, how much it is? 25,000. Minus provision for doubtful debt is 2,500. What is the balance for going concern? 2,000. Sorry. $2,000. So 23,000 is for the going concern. For non-going concern, it is 25,000 minus 6,000. So what is the balance? 19,000. 19,000. Any difficulty? Super. Next point. Closing trade payable is 12,000, which is likely to be settled at 5% discount. Can you please tell me what is my net realizable value? So from 12,000, if I minus 5% discount, how much is 5% discount on 12,000? 600. What is the balance? 11,400. Okay. Now, if I'm going concern aptina, I will show the trade payable at what value? Going concern, which means what? Accounting for going concern we have learned in 11th, 12th and foundation. That schedule 3 also based on going concern only. Think and tell me, if I'm a going concern aptina, trade payable at what value should I record? First, 12,000, 11,400, 12,000, 12,000. Any wholesale adi vaanga poringa ellarume 11,400, 12,000. It's not settled. வாங்க போறீங்க 12,000 11,400. 12,000 super. 12,000 super. 11,400. Oh my god. 11,400. Oh my god. 11,400. 12,000. 11,400. 12,000. 11,400. 12,000. 12,000. Very good. Online people, how many of you say 11,400? Raise your hands. How many of you say 11,400? Raise your hands. Darshini. Only one. I'm surprised. Oh my God. Only Darshini SV says, okay, Harita says 11,400. Okay. Keep your hands down. Those who say 12,000, raise your hands. 12,000, raise your hands. Nobody's raising hands. 12,000. Nobody's listening. Lakshana is raising hands. Okay. Lakshana, Srinidhi. Darshini SV 2 times cheating, ma. This is 1 time only I'll take. Two times not allowed. Mithun says 12,000. Bhuvan says 12,000. Darshini Prabha says 12,000. Other people sleeping, eh? Nobody's responding. Others. Switch on the videos, all of you. Every single person switch on the video. Okay, 12,000. 12,000. Okay. Those who said 12,000. So for going concern basis, we will record the trade payable at 12,000. You guys are terribly right. 11,400 is a wrong answer for going concern basis. Hey, sir, listen to very carefully. Closing trade payable of 12,000 is likely to be settled at 5% discount. What is the meaning of likely to be settled? Likely means what? 50-50, maybe or maybe not. If the opposite creditor says confirm discount apnina, that discount is earned. That discount is earned. Is it confirmed here? They said likely means what? It's still not yet confirmed. நீ கன்ஃபார்மே இல்லாம இந்த 600 வந்து cash discount received in போட்டினா income போட்டினா, is it not against prudence concept? Prudence concept says what? Anticipate losses, don't anticipate income. நீங்க என்ன பண்றீங்க? If you're showing the trade payable at 11,400 means what entry are you passing? What is the entry for trade payable? Trade payable account debit, you're reducing by 600. That 600 not going to pay. Anything that you don't pay is your gain. To discount received 600. This is gain or not? This gain can you estimate and record? Are you allowed to estimate income? No, it is against prudence. Prudence says record the anticipated or estimated losses or expenses, but don't anticipate income. But நீங்க anticipate பண்ணலப்பா. Had he told confirmed given, confirmed discount given apnina, this entry is okay. If discount is earned, we follow accrual system of accounting. Record income when it is earned. This income, this gain, have you earned it? No, because it is likely to be settled. It's not earned. Got it, not got it. If it is earned apnina, creditor is given a statement in email. Take it, confirm, granted apnina, then okay. Then you can pass an entry. It is likely to be settled. Is it confirmed? No. So if you are going concern apnina, you will not anticipate your income and record. Got it, not got it. But if I am a non-going concern apnina, then I'll record at the realizable value. Got it, not got it. Got it, not got it. Clear or not clear? So for going concern, at what value do I record? At the estimated trade payable value, which is a true trade payable value. Non-going concern apnina, this is a realizable value. This is a realizable value. Realizable means what? May realize, may not realize. May realize, may not realize. Got it, not got it. Any doubts here? No. Upon the discount receipt will be transferred where? To P&L. What is the closing entry? P&L to, sorry, discount received to P&L. Discount received account debit to P&L. How much? 600, 600. So in the P&L, on the credit side, record 600. Who's the opposite party? By discount received. By discount received. This will come only in non-going concern basis. Only non-going concern basis. Apana, when I come to trade payable. Trade payable. Going concern is how much? 12,000 and this is 11,400. 12,000 minus 600. Got it, not got it? Oh, what man, 1230 happened? Oh my God. Okay, cash balance is how much? 37,100. Fast, fast, fast. Both same only. Cash 37,100. Any problem? Okay, now last point. There is an early repayment of penalty for the loan. Now, this is called as another name. closure charges. Pre-closure charges. Now understand one thing. Who gives you the loan, people? Who gives you loan? Generally banker. Banker or business another. What is banker's business? Lending business. Means only when they lend money, they will earn the regular income. So our income dependent. Loan is dependent. So you told initially banker, I want a loan for 10 years. Will he be happy or sad? He'll be very happy. Oh, one donkey fellow, I stuck my hands, 10-year loan up there, 10-year income fixed. He'll be very happy. He's expecting to earn income from you for how many years? 10 years. What did you do? Donkey fellow, you're coming and telling that, no, now I'll close the loan earlier. What will happen to him? He'll start crying. You are closing the loan 4 years earlier. Apana, you have used this loan for how many years? 6 years. 4 years ka loan, you're prepaying early. Apana, avanik varmana pocha. So should he be happy or sad? He'll be sad, he'll be frustrated. With the frustration is telling, you closed my loan early, no. My earning you snatched, no. For that I'll charge penalty. That is called as pre-closure charges, pre-closure penalty. He wants to discourage you from he wants to discourage you from closing the loan early. He doesn't want you to close loan early. நீ loan close பண்ணலனா தான் அவனுக்கு வருமானம். அந்த வட்டி தான் அவனுக்கு வருமானம். He doesn't like you to close the loan earlier. Since you're closing the loan earlier, he is having a evil eye on you. He's got a frustration on you. On that frustration, he's charging a penalty called as pre-closure charges, pre-closure penalty. Got it, not got it? Yes or no? Okay, not okay? Okay. What am I supposed to do with this 2,500? And mind you, this 2,500 pre-closure charges will be mentioned in the loan contract. When you took the loan contract, no, in that they'll mention very clearly, if you're closing the loan so and so years early appadina, we will charge the pre-penalty ங்கிறது அவன் சொல்லியிருக்கான். நீ அந்த கான்ட்ராக்ட் சைன் பண்ணியிருக்கேன். So everything is happening as per contract only. Got it, not got it? Clear or not clear? This is very true in the practical life also. This is very, very true in the practical life. Now, this 2,500 prepayment charges, what should I do? For going concern, what should I do? There is an early repayment penalty for the loan. I'm a going concern. Did I repay the penalty already? This will come only when I repay. This will come only when I repay. Got it, not got it? I repay pantana? Pandla. Expense incurred, not incurred. Contract lena solirukkan. This 2,500 penalty will come only when you close the loan early. I'm going concern. Did I close the loan early? No. Should I record this in my books of accounts? No. I will record this only when I repay that loan. When repaying that loan comes earlier, appadina, loss will come, that prepayment charges will come. Did I close the loan here? No. As a going concern, will I record this? So prudence concept, no sir. Anticipate, no sir. Donkey fellow. Anticipation does not mean that every expenses you'll anticipate. I'm going to pay rent for next 10 years. I'll anticipate that and record today itself. No. Prudence concept, along with other things also you have to justify. So this 2,500 expenses not even incurred. Incurring will happen when? Only when the loan is closed earlier. Did I close the loan earlier? No. Is it going to trigger? No. Is there any logic in recording the expenses here? No. So as per going concern, I will not record this expenses. As per going concern, I will not record this provision in the current year. Going concern, you will not record it. But now, from non-going concern point of view, should I record this 2,500 as prepayment charges or not? Yes, because I'm going to close my business. When I'm closing my business, appadina, definitely loan also will be repaid. So I have to bring the loan to the realizable value. I have to bring the loan to the realizable value. So what is the loan repayment value? What is the loan repayment value? 10,000. Along with that, what are you supposed to pay? 2,500. What is prepayment charges? 2,500. 2,500 I have to pay. So in total, how much should I settle to the banker? 12,500 in total I have to settle. So net realizable value means what? Net payable value, net receivable value. Net payable value, net receivable value. So on that value you have to bring in. Because, please understand, I'm closing this business next year. Loan is for more 5 years. When I'm going to close the business next year, apnina, will I do the prepayment or not? You tell me. I will do it. Because some people may have doubt that, sir, going concern, you didn't record the 2,500. But for non-going concern, you're recording 2,500 as loss. Why? Donkey fellow, next year I'm going to close my business. I will settle it. So we are recording at the realizable value. What is realizable value? 10,000 loan amount I'm going to settle plus 2.5 ka prepayment charges. Both put together, how much am I going to settle? What is my liability going to be? Because I know I'm going to pay him early. Next year business close பண்ண போறேன்னா நீ பே பண்ண தான் போற. அப்போ உனக்கு எவ்வளவு பே பண்றீங்கிற விசிபிலிட்டி இருக்கா? இருக்கு. 10 வந்து principal amount and 2 prepayment amount. So that is my total net realizable value. Got it, not got it? Clear or not clear? If you come back here, if you look at the answer, the loan penalty is 2,500 only for non-going concern. And if you look at the liability amount, for non-going concern 35 down. But for going concern, apart from 35,000, you're plus going to pay 2,500 extra. Why? Because you're going to close the loan early next year. Close பண்ணல அப்படின்னா the loan will go for 5-10 years. But next year when you're going to close the business means obviously loan has to be repaid. Without repaying the loan, can you close the business? Not possible. அப்போ நான் next year என்ன pay பண்ண போறேன்? 37,500. This is called as realizable value. What is the meaning of realizable value? At what value I'm going to settle the liability? At what value I'm going to pay the liability or receive the asset? So இதெல்லாம் வந்து value of the asset that I'm going to recover. This is all the value of the liability that I'm going to settle. This is called as net realizable value. What is it called as? Net realizable value. Got it, not got it? To loan penalty, 2,500. 2,500. Where non-going concern. 10% bank loan. 35,000. No, how much it is? 35 only, yeah, okay. 35,000 will be for going concern plus 2,500 for non-going concern, which is 37,500 for non-going concern. So please give a clear breakup that 35,000 is loan principal and 2,500 is loan penalty. Loan principal, loan penalty. Please give it very clearly because tomorrow you'll forget. Tomorrow in the sense what? Your exam is in Jan. So by that time everything will forget because you guys are Gajani. Very good. Super. Now, what is pending? Capital as it is same 60-60 I'll take. Capital same 60,000, 60,000. PP over, stock over, trade receivable over, deferred and expenditure over, bank over, capital over, P&L same 25,000 will come. Same 25,000 will come. This P&L 25,000 is opening balance. Opening balance. So P&L 25,000 is opening balance at net profit of current year. So for that, what I'm supposed to do? Calculate the profit and loss from the P&L. So balance the profit and loss and tell me how much are you getting? Profit or loss? Profit you're getting. How much? To net profit. How much? 22,200. This is the profit, people. For both the concerns, this is the profit. So one is 25,000 plus 19,600. Another is 25,000 plus 22,200. I don't have space. I'm not writing it. You write it separately. 44,600. 47,200. So the both sides should tally. Is it tallying? Please confirm. Total, please. 156, 100. All. Got it? That's what I was wondering. How it is coming for everything same. $151,100. என்னம்மா சொல்றீங்க? 151,600. Okay, 151,600. 151,600. Then 156,100. 156,100. Oh. Clear? This is question based on non-going concern. Okay, wow. Now coming back. Now. Now, my question is one doubt with regard to trade payable. I'm explaining one more time. Listen to very carefully. Can you just read this line once? Closing trade payable of rupees 12,000, which is likely to be settled at 5% discount. What is the meaning of likely? May or may not. Means what? Creditor is still not accepted. We are proposing that we want a 5% discount because we're settling earlier. Correct? See, in 11th we studied people. Whenever you make early payment to creditor will offer a cash discount. That is only in case of creditor. Bank loan வந்து பாத்தீங்கன்னா நீ earlier கொடுத்தா அப்படின்னா அவனுக்கு கோவம் வரும். He will charge penalty. For bank loan, there's a different criteria. For creditor, different criteria. Normally in 11th we have learned and foundation we have learned that whenever you make early payment to creditor, you will receive a discount. That is called as discount received. Discount received is nothing but cash discount received. When does cash discount receipt come into picture? In case of early payment, prompt payment and on-time payment. Got it, not got it. That is immediate payment, early payment and prompt payment. இப்போ இந்த டிஸ்கவுண்ட்ங்கிறது income. Because I'm paying less, 600 I'm paying less, I'll record income when it is confirmed that I'm going to pay the creditor at the lesser value. Here, can it confirmly tell me that you're going to pay the creditor at the lesser value? I'm asking all of you, is it confirmed here that you're going to pay the creditor 11,400? It is not confirmed because the language says is likely. Now imagine, நீ 600 வந்து discount receipt நினைச்சிட்டு நீ account பண்ணிட்ட அப்படின்னா, you're violating which concept? Prudence concept. Because you're anticipating income. Can we anticipate business income? No. Income should have been earned. So going concern basis, I'm not recording the 600 as discount receipt because it is anticipation of income, which is against the prudence concept. Got it, not got it? Okay. So hence I'm not recording the 600 discount receipt. But in non-going concern, NRV means what? At what value I intend to settle. At what value I intend to settle. நான் என்ன வேல்யூல க்ளோஸ் பண்ணலாம்னு இருக்கேன் அப்படிங்கிறது கேட்குறான். So my intention is to settle at 11,400. This is NRV. Upon the trade payable, from 12,000, if I have to bring it to 11,400 means 600 I should pass some entry. No. Upon trade payable, na debit panada, trade payable will reduce. Because I have to bring the trade payable from historical cost to the net realizable value. Trade payable at 12,000 means historical cost. I'm bringing down to net realizable value. What is net realizable value? That value which I intend to pay. That value which I intend to pay. Appa trade payable enna pandra debit pandra 600. What will you give us a credit? Discount receipt. What is discount receipt? Income. When this income is transferred to P&L account in case of non-going concern basis. Got it now? கிடையாது. Because prudence concept எல்லாமே நீ எப்போ follow பண்ணணும்? If it is going concern. All the fundamental accounting assumptions, accounting standard framework is followed when? Only when going concern. Non-going concern அப்படின்னு முடிவாச்சு அப்படின்னா அப்போ framework என்ன சொல்லுது? What is framework saying if you're non-going concern? Everything should be at net realizable value. Got it, not got it. Which means what? If I pay this if I pay this liability today, what will I pay? If I receive money by selling the asset, at what value will I receive? That is called as net realizable value. Go okay, not okay. What is net realizable value? Today at what value I'm going to settle the liability? Today at what value I'm going to receive the money from selling the assets? That is called as net realizable value. Kana, nalla புரிஞ்சுக்கோங்க. Net realizable value doesn't mean that this money what I'm expecting to receive or pay, exactly this will happen. In reality, இப்போ ஒன்றும் இல்லை. You have said here, no, PP is 60,000. I am expecting that this will be sold at 60. But tomorrow when I go and sell after 1 month, it can be 59 also, no? Your phone வந்து நீங்க 1 month தள்ளி வித்தா ஒரு ரேட், இன்னைக்கு வித்தா ஒரு ரேட். Yes or no? If today I sell phone one rate, 1 month later one more rate. So the 60,000ங்கிறது தோராயமா தான் போட்டிருக்கோம். So from this also the reality will differ. But what is the 60,000? We believe that if I sell the asset today onwards, we will fetch 60,000 feel pandrom. For this purpose, I cannot prepare balance sheet on every day basis on realizable value. Today one rate, tomorrow one rate, after tomorrow one rate. I cannot keep on doing because we prepare the financial statement as per the framework once in a year. We prepare the financial statement for an annual basis. So framework is given suggestion for annual basis of preparing the financial statement. Got it, not got it? Clear or not clear? Okay. Now, 2 more scenario given. You tell me what is your answer in this. A company has been incurring losses for past 3 years, but is still operating normally. Last 3 years losses, but still operating normally. Management expects improvement in future. Management expects improvement in future. Financial statement are prepared on going concern basis. What have they done? Prepared on going concern basis. Is it correct? Second, if they are preparing on going concern basis financial statement, is disclosure required. Last 3 வருஷமா business loss இருக்கு. Last 3 years business is into loss. But management expects that in upcoming years we might improve and get future profits. So financial statement they're prepared on going concern basis. Is it right or wrong? Who said if the business is into loss for last 3 or 5 years, you have to prepare on non-going concern basis? Going concern or non-going concern, who will decide? Profit loss will decide. It is decided by the intention of the management whether they want to close the business or continue the business. Anywhere here have they mentioned that they want to close the business? Illa. Upon intention is to continue the business. Continue the business for a foreseeable future. Upon what intention is here? Going concern. Based on that, they prepare the financial statement. What is wrong in it? Nothing wrong. Is disclosure required? Did I prepare the financial statement on going concern basis like the disclosure is required? Not required. Yes. It is correct to prepare the financial statement on going concern basis because business is expected to continue. Disclosure is not required for preparing the FS on the going concern basis. Any difficulty? No difficulty. This type of questions will come in the exam. Be very, very mentally prepared. Scenario 2. The above mentioned company. Scenario 2 is continuation of scenario 1. In the above mentioned case, question, now the company has decided to close down its operation and sell all its assets within 6 to 12 months. In next 6 to 12 months, they want to close the business, sell all the asset, recover the money and pay all the liabilities. However, it prepares the financial statement using normal accounting policies. Normal accounting policies is applicable only when you are going concern. But you are now going to close the business. அப்போ நான் ஃபினான்ஷியல் ஸ்டேட்மெண்ட் எப்படி ப்ரிப்பேர் பண்ணோம்? நான் கோயிங் கன்சர்ன் பேசிஸ்ல. பட் அவன் எப்படி ப்ரிப்பேர் பண்ணியிருக்கான்? On going concern basis, he is prepared. Is it right? No. Is it correct? No. Is disclosure required? Yes. No. It is not correct to prepare the financial statement on going concern basis because business is expected to be liquidated. So going concern assumption is not valid here. Going concern assumption is not valid here. Financial statement should be prepared on non-going concern basis. Accordingly, assets and liabilities should be measured at the net realizable value. And the fact should be specifically disclosed that we are not going to follow the going concern assumption. So in division, you disclose for now. You have to disclose 2 things. One, I'm a non-going concern entity. Hence, the financial statement is prepared on the basis of non-going concern assumption. In the fact, you have to state. This fact, you have to state. Second, you have to re-prepare the financial statement on the non-going concern basis at the net realizable value. Got it? Not got it? Super. Question from this chapter does not come every attempt. But if it comes for 4 to 5 marks. Tell me people, if the same question comes in exam, scoring 4 to 5 marks in this is easy or difficult? Many places, I'm telling you, they skip this chapter. Considering this as not important. Because very rarely they've asked. Even in schedule 3, remember, the dividend-based question. Hardly in few attempts they've asked. Ana keta anjima kepang. But it is rare. Thinking that this is rare, people don't study and go. And they'll end up losing 4 or 5 marks, which easily can be gained. That one question could be a life-changing factor for you. 1 mark will decide your pass and fail. This is 5 mark, boss. Like that, in every subject, how many chapters like this are there, which is less important? We skip and go. We don't score the mark. And tomorrow we fail and said, then what do we say? IC has become very brutal. Sectionala சரியில்லை. டஃபா பேப்பர் செட் பண்றாங்க. இந்த क्वेश्चन ஃபர்ஸ்ட் டைம் கேட்ட டஃபா. If this question is not done in syllabus, totally different one if they're asking அப்படினா definitely we don't know how to approach. Then you can say. But is there in syllabus, you are not studying. And later if you tell no paper is tough அப்படினா, does it make sense? Does it make sense? No. So everything you have to study and go. I'm not telling only for accounts people. Let it be for law, tax, group 2, any paper. It's my humble request to all of you. Smallest of the smallest concept also you learn and go. Everything you learn and go. From wherever they ask question, you should be in position to answer. To that level you prepare and go. I'm telling you, everything within your syllabus is what is going to come. Nothing is going to come from out of syllabus. The only problem is the portion is huge. Volume is huge. Remember, everything is very difficult. For that only you do continuous revisions. Revision is only the game changer, I'm telling you. Chalo, anyways. Second assumption is accrual assumption. What is the meaning of accrual? We discussed in depth in 11th, 12th and foundation. Again, I'll not discuss right now. This topic will be discussed in multiple places in intermediate. When you come to AS7, AS9, AS12, we'll discuss the meaning of accrual in depth. But in general, what is meaning of accrual? I will record income when I earn it. Receiving the money is not the criteria to record the income. For example, 31st March 2026. On this date, this AC is there, no? Got, spoiled or got repaired. That very day, I called the AC mechanic. He came, he did the service and went. He didn't take the money from me because he was known to me. I said him, 2 days later, I'll GPay. He said, okay, and left. Now the question is, this AC mechanic is supposed to record income on 31st March 26 or I actually made the payment on 2nd April 26. So should the AC mechanic record the income on 31st March 26 or should he record on 2nd April 26? You tell me. 31st March 26 because on that day he has earned the income. Earning the income depends on what? But in goods business, when the ownership is transferred, the transfer of ownership date is considered as income earning date. In case of service business, when is income earned? When the service is completed. Okay, not okay. About this, in depth, the discussion is there in AS7, AS9, AS12, and other small AS. Revenue-based AS. What based AS? Revenue-based AS. They'll tell you at what point of time such and such income should be recorded. AS7 talks about construction contract. If I'm to construction business, when should I record my revenue? That solution is given in AS7. For my teaching business, when should I record my revenue? That is being given by AS9. If I'm getting any grant from government, that how should I record? That is being given in AS12. So specifically where it is given in accounting standards. But in general, what does accrual mean? Accrual means record income when it is earned. When do I say my income is earned? In general, if I'm into the business of selling goods, when I transfer the ownership of this product, in the product ownership, physical delivery, payment is not the criteria. Transfer of ownership is the criteria. So when ownership is transferred, I have earned it. You have incurred the expense. I have earned the expense. You have incurred the expense. I have earned the expense. In service business, when do I record my income? When do I say my income is earned? When the service is completed from my side. I completed, you received. I completed, you received. That is the criteria to record the income and expenses. Income is recorded when it is earned. Expense is recorded when it is incurred. Got it, not got it. Framework says that you have to follow accrual system of accounting. Are they compelling it? No. It's an option. It's an option. It's not a compulsion. Sir, can I follow cash base of accounting? The answer is yes. Got it, not got it. But in general, framework is suggesting which is the best method to account. Accrual basis is best. Reliance Industries Limited. I am preparing financial statement. What will I follow? Accrual only. Because worldwide, accrual is accepted. So Reliance Limited, are they supposed to disclose that I followed accrual system? No. When you follow what is required to be followed, disclosure is not required. When the disclosure is required, if Reliance is following they're following cash basis of accounting, then they have to give the disclosure. Ni accrual follow pannina, disclosure kudukka thevilla. If you're following accrual, no need to give disclosure. If you're not following accrual, means what are you following? Cash basis of accounting, then you have to give the disclosure. Got it, not got it? Oh. Accrual basis of accounting means revenue are recognized as they are earned, not when cash is received. I'll record income when my income is earned. Receiving cash is not the basis of recording. And expenses are recognized when they are incurred. Payment of cash is not the criteria. If I pay expenses, if I don't pay no expenses, that is not the criteria. But that will be a criteria for which basis? Cash basis of accounting. Nee cash basis follow pannina, receipt le income, payment le expense record pannuva. But if I am following accrual basis means, I'll record the income when it is earned. Earned, this is a keyword. And I'll record the expenses when it is incurred. This is a keyword. Got it, not got it? Such income and expenses are recorded in the financial statement for the period which they relate to. If now this AC mechanic has given the services when 31st March. So this income is belonging to which financial year? 25-26. So in that financial year, they are supposed to record அப்படிங்கிறது. This point is trying to say, okay, not okay. Now listen to me very carefully. Legal requirement. As per Companies Act 2013, where in section 128, subsection 1, companies are required to maintain books of accounts under accrual basis only. Appona, if you are a company, law does not permit. Which law? Companies Act law does not permit you to follow cash basis. Got it? Not got it? The framework says accrual basis or cash basis, both are allowed. Special financial reporting says what? Only accrual basis. Point is contradictory or not? Yes. Whom will you follow? This you will follow. So for companies, if you go to any company, OPC, private company, public company, compulsory they have to follow accrual basis. Who's saying that? Companies Act. But if I'm a non-company, sole proprietorship concern, partnership concern, do I have the flexibility to prepare on cash basis? Yes. If you're following cash basis apnina, framework says give a disclosure. Got it? Not got it? Okay. However, non-company entities are allowed to follow cash or accrual basis depending on the nature and requirement. உன் பிசினஸ்க்கு ஏற்ற மாதிரி நீ ஃபாலோ பண்ண நாங்க flexibility கொடுக்குறோம். Based on your business requirement, we'll give you flexibility. If you are comfortable to accrual, if not, do cash. Disclosure requirement. When disclosure not required, the financial statement are prepared on accrual basis. No specific disclosure is required in the notes to accounts. Why? Because accrual basis, since accrual basis is the fundamental accounting assumption. Accrual is a fundamental accounting assumption. It is generally accepted and implied that the entity has followed accrual system, and hence financial statement are prepared accordingly. So when you prepare the financial statement, we believe that you prepared on the accrual basis. So for me, no need to state every time. No need to tell me every time we followed accrual. No need to tell. Now, if I take the financial statement of Reliance, do I need to go and check in the disclosure whether they followed whether they followed accrual or not? Not required. We believe that the financial statement that is prepared is as per accrual. But disclosure required or not required? When is Reliance supposed to give disclosure? When it is not following accrual, upon the disclosure, because that is surprising to me. How as a company not following accrual basis? That is surprising for us. In the surprising case, you're supposed to give a disclosure. So when disclosure is required, if the financial statement are prepared on cash basis, this fact must be disclosed in the notes to accounts, because there is a deviation from the accounting assumption. What we normally assume, you did opposite to that. You gave a shock to us. Now you have to give a disclosure. Why you have given this shock to us? Got it? Not got it? Okay. So far, how many assumptions have we discussed? 2. One is going concern. Second is accrual. Third is consistency. Consistency meaning what? Consistency means that accounting policies, whatever you adopted, is applied consistently from one period to another period. For example, to calculate the cost of inventory in AS2, 2 methods has been suggested. One is P4. Second is weighted average. If you're using weighted average aptina, we believe that every year you used weighted average. First year you used weighted average aptina. We believe that second year, third year, fourth year, everything you used weighted average. So one time you apply an accounting policy, we believe that you have consistently applied the same policy every year. Got it? Not got it? In that case, do I need to give any disclosure? Do I need to tell everybody, yes, this year also I followed weighted average. Yes, this year also I followed weighted average. Like that, should I give a statement every year? Not required. When disclosure not required. If accounting policies are applied consistently, no specific disclosure is required in the notes to accounts. Since consistency is the fundamental accounting assumption, it is generally implied that the entity followed the consistency, and hence the financial statement is prepared accordingly. So we believe that you followed consistency and done, hence no need to give any disclosure. Disclosure should be given when there is change in accounting policy. If there is a change in accounting policy, disclosure is required. What is change in accounting policy? From weighted average, I came to P4 method. From weighted average, I came to FIFO method. This is called as change in accounting policy. Got it? Not got it? In that case, you have to give a disclosure. If there is change in accounting policy, you have to give a disclosure. Sir, what disclosure? 3 disclosure. One, you have to state the fact that you've changed the method from weighted average to FIFO. Like that, you have to specify the fact. Now, you have to accept the fact that I've changed the method. One. Next, reason for change. Why did you change? What is the reason behind it? Specify pannu. Now, what could be the reason? I'll discuss here. These are the 3 reasons. Out of these 3, any one reason you can choose. Got it? Not got it? Third point, by changing the accounting policy, what effect it has on the financial statement? That is, weighted average, had I done in weighted average, the inventory value would have been 30,000. But if I do FIFO, it is coming 20,000. which means my closing stock from 30 came to 20. If closing stock reduces by 10,000 rupees apnina, my profit will reduce by 10,000. My profit will reduce by 10,000. That effect or impact on the financial statement, what it is, you have to disclose. Because of change in method from weighted average to FIFO, closing stock reduced by 10,000. Thereby, the profit has reduced by 10,000. Like that, the impact on the financial statement should be stated in the disclosure. Got it? Not got it? Tell me. Yes. Somebody called me? No. Second. Sir, I was following SLM method, sir. Straight line method. I shifted to WDV method, sir. Is it change in accounting policy? Wrong. September people, what did we learn? This is change in accounting estimate. So we will do upcoming classes, different accounting standards. In which accounting standard did we learn this? Very good, very good. AS5, okay. We will do accounting standards. No, that time I'll tell you, there are two types of changes. One is change in accounting policy. Second is change in accounting estimate. SLM to WDV is called as change in accounting estimate. Why it is like so, I'll be discussing in the respective accounting standard. Got it, not got it? Got it, not got it? Why I highlighted this point is because I wanted to put the seed right now in your mind. In future, when the same point will come in some other AS, no, that time I'll discuss. Change in depreciation method is no longer called as change in accounting policy. Earlier it was called. Adhiko history, I'll give you that history also. Earlier it was called. Now, change in accounting method is not change in accounting policy. It is change in accounting estimate. For change in accounting estimate, disclosure is not required. These three disclosures are not required. Got it, not got it? Only for change in accounting policy. For change in accounting policy, what is required? Disclosure is required. Got it, not got it? Sir, you said no, 3 reasons for change. Accounting policies can be changed for 3 reasons. What 3 reasons? As per accounting standard, accounting policy can be changed if such change is required by statute. Statute and another law. Companies Act or Income Tax Act says from now onwards, no weighted average, only P4. Then from weighted, you have to shift to P4. So you're changing the policy. Who said? Law said. That is the reason. Got it, not got it? Or who will say? Accounting standard. So accounting standard got revised. Now accounting standard in future, they're telling that inventory should be valued. That is, cost of inventory should be valued only at FIFO. Weighted average, vanda apnintana. From weighted, should you come to FIFO? Yes. What reason? Because accounting standard got upgraded, changed. That is the reason. What is the third reason? Third reason, for better presentation of the financial statement. In most of the questions, you will give this reason and come. Why I changed? Because I feel that if I shift from FIFO to weighted average or weighted average to FIFO, my presentation can be better in the financial statement. Hence, I'm changing the policy. For betterment of presentation of the financial statement, we change the accounting policy. Who will come and question you? Who will come and question you? Nobody will come and question you. So what are the 3 reasons can you give for change in accounting policy? Change is required by statute, by accounting standard, or for better financial statement. There is better presentation of financial statement. September people, can you tell this is covered where? Where did we discuss this in depth? AS5 or AS1? Very good. AS1. Ella 5 mala podra. Got it, not got it? So when we come to respective AS, we'll be discussing all this one by one. Clear or not? Chalo. Till what time is the class today? Till 1:30. Till 1:30. Okay. What are the qualitative characteristics of financial statement? In one of the examination, this question was asked for 4 marks. What are the qualitative characteristics of financial statement? When you prepare a financial statement, what should be the quality of the financial statement? What is the expectation from the financial statement? What should you expect from that financial statement? If I'm a company, if I'm preparing the financial statement giving to you, who are you? User of financial statement. Who are you? User of financial statement. In the financial statement, how do you expect or how do you want this financial statement to be? What is your feeling? How this financial statement should be? So that feeling we're going to discuss. So the first feeling of the user is that the financial statement that you give it to me, give in such a way which I can understand. So understandability is the key characteristics. புரியுதா? Qualitative characteristics. Based on this, either you'll get MCQ or a direct question. High chances for MCQ. High chances for MCQ. First is understandability. Second is relevance. Third is reliability. Fourth is comparability. What is not here? Transparency is not here. So they'll give you 4 qualitative characteristics. In that, 1 will be right, 3 will be wrong. In that 3 will be what? Transparency will be there. Then what will be there? Uniformity will be there. Then what else is there? Something else. Up in the moon level, you have to choose correct one, which is what? Understandability. U for understandability. U for uniformity is not given. So is uniformity a qualitative characteristics? So qualitative characteristics means only these 4. Nothing else. Can I say this was there in foundation also? This was there in foundation also. Information presented in the financial statement should be readily understandable by the user with reasonable knowledge of the business and economic activity. Means what? Understandability means what? Are we trying to prepare a financial statement in such a way that a science person can understand? No. Understandability means what? Somebody who studied accounts, no. அவனுக்கு புரியுற அளவுக்கு நீ financial statement ரெடி பண்ணணும். A science background person, if he has got some education in accountancy அப்படின்னா, at least him to understand where to prepare. A person who does not have any background idea of accountancy, அந்த அளவுக்கு நீ வந்து டீப்பா வந்து அண்டர்ஸ்டாண்டிங் கொடு அப்படின்னா கொடுக்க முடியுமா? முடியாது. So understandability means what? A person who's got reasonable business or business knowledge or economic knowledge அப்படின்னா அவனுக்கு புரிய அளவுக்கு, for him to understand accounts, to that level you give a understandability. Got it, not got it? Clear or not clear? Okay. So first is understandability. Second, relevance. Who am I? Company. Who are you? User. Company is giving financial statement to user. Why? So that you read the financial statement and take decision. Take decision. So I should give that information which can influence your decision. If I give too less information or too much information, both are bad. Is it true that if I give too much information, it is good for you? Is too much of anything good for everything? No. Too much of anything is good for nothing. Too much of cook spoils the broth. You give me only that information which can help me in decision making. For example, if accounting standard says every company is supposed to give a complete printout of cash and bank ledger to all the user. So company is giving you the complete printout, 5,000 pages ka booklet of cash and bank transaction. இது வச்சு ஏதாவது பண்ண முடியுமா நீ? அந்த 5,000 பேஜ் மனசாட்சி வச்சு சத்தியமா சொல்லுங்க, உன்னால பார்க்க முடியுமா? I give you too much information, boss. Take decision now. Give me that information, reading which I will understand and take decision. So give me relevant information. Don't give irrelevant information. Too much of information also is bad. Too less also is bad. You have to give correct information. Got it, not got it? How much is relevant for me? That only I wanted. The financial statement should contain relevant information only. Information which is likely to influence the economic decision to user is called as relevant. Whatever information you give it to me, which can influence my decision, that is considered as relevant. All the other information is considered as irrelevant. Got it, not got it? Okay. Reliability. Information that you provide to me in the financial statement, the financial information should be reliable. Should be reliable. Means what? They must be free from material error or bias. In one of the company, this year, fire took place. In that fire, 1 lakh worth of goods has been destroyed. That loss has to be recorded or not? It has to be recorded. But they have not recorded. Without recording, they gave the financial statement. On that basis, you thought that, oh, company, super big company, nalla company. We can invest in it. And in that loss, lot of important things have been burnt. Lot of important data has been burnt, which is a question mark for the continuity of the future business. Upon on kurta information, is it reliable or not reliable? It is not reliable. It has got errors into it. You've not recorded loss. It's an error. Purida. Sir, small error. Let's say theft happened in the business. How much? 500 rupees ka theft happened. Cashier is there, no? He took 500 rupees and went off. 500 rupees. Error only. That error is not showed. And loss is show panla. 500 rupees loss. Somebody stolen that 500 rupees from the company. Loss or not loss? Loss. Should they record or not? Yes. But they didn't record. Now that financial statement is not having that 500 loss. Can you see financial statement is not reliable? No, it's reliable only. See, material error on the record. Material means what? Significant. Significant means what? Big error. If big error is not recorded, then it is affecting me, my decision making. Small error irukku. Human being means you will make mistakes. There is no accounting, team which is 100% doing correct accounting. As a human being, even you will make mistakes. But if that mistake is small, petty mistake, which is immaterial, non-material appadina, then you will not consider that financial statement non-reliable. It is reliable only. When will I consider it as non-reliable? It is a big error not recorded. 1 lakh, 2 lakh, 5 lakh, 10 lakh, 15 lakh worth of loss incurred, not record aptina, that is material. So if material error is not highlighted aptina, then the financial statement is not reliable. Small error, actually record only. Even though you miss it, on the 500 rupees, somebody is stolen. Because of that, will your opinion change about the company? Will Reliance fall down? No. Purida. So when we are talking about relevance here means we are talking about material information. What information? Material information. If material information is not shown, then the financial statement are not reliable. Got it, not got it? Okay. Comparable. We expect that the financial statement that you give to the users should be comparable. What type of comparison you should do? You should be able to do inter-firm comparison and intra-firm comparison. What is inter-firm comparison? Comparison within the entity. Comparison within the entity is called as intra-firm comparison. Sorry, intra-firm means within the entity. Means what? I'm comparing my current year financial statement with the previous year financial statement to see whether I'm doing the growth in the business or not. That is intra-firm comparison. What is inter-firm comparison? I'm comparing my financial data with the competitors' financial data. My data, let's say with Byju's, I'm comparing. Example I'm telling. So it is inter-firm comparison. Inter-firm comparison. Between two academies, we compare FFLA and KVA. Fortune and Kalpavriksha comparison. What do I need? That is called as inter-firm comparison. Kalpavriksha Academy's current year data I'm comparing with previous year data. What is it called as? Intra-firm comparison. Now, ஒரு financial statement comparative இருக்கணும் அப்படின்னா, if one financial statement should be comparative means, what is the condition required there? The basis of preparing should be uniform. What should be coming into picture? Consistency should be a part of it. All the accounting policies adopted by both the entities should be consistent. The accounting policies adopted by the same entity in the previous year and current year should be same. If you keep on changing 1 year this, 1 year that, 1 year this, 1 year that, appadina, can I compare the data? Not possible. For example, last year I prepared the financial statement on cash basis. This year, accrual basis. Can I do a comparison? Not possible because the base is different. I'm following accrual basis in Kalpavriksha. In FFL, I'm following cash basis. Can I do comparison? No. For me to make the financial statement comparable, the basis should be same. These are the minimum 4 things as a user we expect from the financial statement. Got it, not got it? So what are the 4 qualitative characteristics? Understandability, relevance, reliability, comparability. Understandability, don't confuse with uniformity. Uniformity is different, understandability is different. So 4 qualitative characteristics அப்படினா இந்த 4 மட்டும் தான் வரும், வேற எதுவுமே வராது. Okay, not okay. Super. Now I'm left to discuss with you 2 concepts. One is method of capital maintenance. Little tricky. It's little different from what you've learned in life so far. Life. And second, I'm meant to discuss with you the basis of measurement for each elements of the financial statement. These 2 will at least take 1.5 hours. 1 hour will go in that capital maintenance and half an hour will go in the basis of measurement. What is the time now? 1:07 it is. So can I give you a break? You'll take up test. What is the time for test? 3 o'clock. So which means from now till 3 o'clock you have time to lunch. Take lunch. 1 now 3. Too much, no? Oh my God. Who will give too much? How many minutes for lunch? Generally 25-30 minutes. 30 minutes for lunch? 45 minutes. 45 minutes you need? To go order and come. Oh my God. But since I'm leaving early, can we have test early? What is the test timing? 3 to 3:15 to 4:30. So class will start at 5 o'clock. Okay. 5 o'clock is fine. So 5 to 8:30 is the class, no? So first 1.5 hours we'll finish the remaining 2 concepts. Remaining 2 hours will be there in hand. In that 2 hours, full revision will do. So during the exam time, will be very handy. Can we do it? Chalo, great. So online people, can I wind up? You're sitting at home, jalsa for all of you. No stress, no tension, nothing. Chalo. Let's wind up. That's all from my side for this session, people. I'll see you all at the evening session, 5 p.m. sharp. Until then, bye-bye. See you. Take care. Thank you so much.